Oh, hi. I'm a smart investor. I dare say that because I understand the cryptocurrency markets and I am up to date on every new development, fintech and blockchain ecosystem. All because I watch the Inside Blockchain show on Crypto TV Plus. Every Monday morning, Crypto TV Plus brings you news headlines of top stories, interview with an expert, and give you detailed market analysis to enable you make the right business moves. Now you too can become a smart investor if you don't miss it. The Inside Blockchain Show, only on Crypto TV Plus.
Hello guys, happy new month. Are you into blockchain and cryptocurrency? Then you need to be well informed. At Crypto TV Plus, we give you the latest information on blockchain and cryptocurrency, from DeFi to NFTs, metaverse, everything blockchain. Visit Crypto TV Plus today. Welcome to the month of August.
Are you there? It's your boy. No, sorry, it's your daddy, Mr. Macaroni. Keep watching Crypto TV Plus if you want to be doing well, especially. You get me now? Alright, you're doing well.
Hello and welcome to the program. This is Inside Blockchain live on Crypto TV Plus. My name is Faith Aquari. It's another Monday morning. Happy new month and welcome to the month of August. If you're watching us for the first time, do well to follow us on all our social media platforms and subscribe to our YouTube channel at Crypto TV Plus. Click on the bell icon to be notified whenever we release a new video. Crypto exchanges have contributed greatly to ease crypto trading, open new and innovative markets. We have also seen how the industry has evolved with innovative solutions, but the market will always be the market, as we have seen in the recent market crash. What is the future of crypto exchanges? We'll be centering our discussion around this topic, but before we get into this in-depthly, let's go on a quick break. Stay with us, we'll be right back.
Hello guys, welcome into the metaverse on Crypto TV Plus. In today's video, we're going to be taking a portal into the Wolves of Rome metaverse. Here's a hint. Put your poker face on and follow me. Wolves of Rome is a traditional trading card game all about legendary commanders, big players, and tons of competitive battles. It is magical. The Gathering-inspired universe with a twist of ancient history where anyone can earn tokens through.
Don't get stuck in the past. Get all the latest news and happenings on blockchain and cryptocurrency, only on Crypto TV Plus.
Hello, my name is Chiki and I'm the Bull of the Bullet.
Keep watching Crypto TV Plus.
Don't touch that die. Peace.
Welcome back everyone watching us from around the world. This is Inside Blockchain. Thank you for tuning in this Monday morning. My guest joining us virtually is the co-founder of Store. He's also a certified cryptocurrency specialist, an entrepreneur, and a DeFi expert. Mr. Lucky Uwakwe, thank you for joining us today.
Yeah, thank you so much, Faith. It's a pleasure being on your program again today.
It's amazing. It feels great having you here. So let's go straight to business. Without doubt, the economies around the world are heading for a recession. Crypto economy is not left out. But let's talk about what's happening in Nigeria right now. The Naira has crashed to over 710 Naira to $1. A report by Bloomberg said crypto traders are to be blamed. What do you think about that?
Absolutely. That reason is laughable because of the fact that at least numbers don't lie. They don't lie in the sense that in what way are we to be blamed, especially those who are participating in crypto? Is it from the aspect of where we want to say that we hold a strong part of the production or we hold a strong part of either input, output in terms of productivity in the country? While I'm not saying we don't have a responsibility here, I'm saying our impact cannot be the sole reason why Naira have really tumbled to where it is today. Moreover, when you look at the volume in terms of the Naira trade done in the country, crypto people don't even do up to 5% of that. So it's not possible to say that crypto people are responsible for that. That's not a fair accusation from whoever the person is or the authority will be.
Okay, so let's move a little bit to regulation. Regulation has always been a hot subject in the space. And looking at all that has been happening with Luna, Celsius, Voyager, and Three Arrow Capital, how do you think regulators can make crypto investing safer?
Okay, so actually, regulators will always have a role to play, especially when it comes to new and emerging technologies like ours. Especially, we know that there seem not to be any standard as it stands today. But when regulators come in from two perspectives, first to protect the community, the investors, as it's rightly called, and second to also ensure that people are compliant with certain standard, be it whether AML, KYC, whichever the drivers of the economy would be for a particular country. Regulators have a very key important role to play here, especially when we know fully well that bad actors are not left out in trying to utilize any new technologies to either circumvent certain policies. But as it stands today, the global regulations that we have, be it from the SEC, or where if I want to draw reference points to the Basel conference, which is popular for most bankers or most banking institutions, as it stands to the regulation from Basel 3.0 has nothing to do with any specific reference to crypto. The closest we ever see from a global perspective is that of the Financial Action Task Force, which was released in 2021, late part of 2021, or an updated version of it was released in 2021. And still, reference were made basically to crypto from the concern point of view of not allowing it not to be used as something for financing terrorism, or where people who are under sanctions or the sort of watch lists will not utilize it as per se. But they didn't really come from the perspective of where we would utilize, where crypto can be regulated from an innovative point of view, if you would ask me. And hence, regulators in every jurisdiction have a role to play. Maybe the regulations might not be universal from one jurisdiction to another, but at least we know the regulators have a role to play, and that's why I like what I'm seeing in places like in Dubai, in UAE, specifically in Dubai within UAE, and in some other regions like maybe Singapore, where they've really welcomed a lot of the crypto players to a very great extent, simply because their laws are friendly, and compliance is, of course, a key word for them.
Amazing. Still on the subject of regulation, because I know you've said one or twos on regulation. We have the United States House of Representatives presenting a bill addressing the rules of stable coin. Likewise, the UK Department of Treasury is also considering legalizing stablecoins as a form of payment. How does this impact algorithmically stablecoins in a sense?
Okay, the beauty of what that will do, of course, is like government also want to ensure that no stone is left unturned in terms of people utilizing state-owned assets as per a tool for them to either enhance or do whatever thing they want to do. Remember, most stable coins are typically backed, or the most widely used stable coins today are the type that are typically backed by assets, which they call asset-backed stable type of coins. Of course, these coins also heavily dependent on national fiat of certain countries. To be specific, most of them are more of US dollar-based type of backed sort of, compared to other nations' currency. But in terms of the U.S. government or the House of Representatives passing or pushing for that regulations around things that will impact stablecoin, which I see as a lifeline in terms of within the crypto market. It's important to note that algorithmic stablecoins actually came with a certain concept where we will be able to remove that. Will I use the word bottleneck? I don't want to rather see it as a bottleneck in this case, but for the lack of a better choice of word, I would want to use the word bottleneck, where they want to remove that bottleneck per se, such that government at no point in time will now come to interfere in the process. Yes, if government decides to, be it whether from the US government or whichever nation's government, decide to regulate the crypto stable coins within the crypto space, I don't necessarily think it's going to impact algorithmic stablecoin from a negative perspective. Rather, people who are really more pro decentralization to to a high degree or to totality would still prefer more of stablecoin. I believe, or I think from the look of things, that if government decides to push that aspect of regulation, then there should be a boom in algorithmic stablecoin. Even though we've seen where some algorithmic stablecoins have failed in the past, whether we want to talk about the UST Terra, as the case may be, but maybe we might begin to see some algorithmic stablecoins that might be choose to be backed with other assets that are not necessarily correlated to crypto, or that are not necessarily fiat-based back. Maybe, for example, utilizing mineral resources like gold or diamond as a way to back it up. Of course, one of the essence of what we saw or what we've learned from that of Luna is that if the trust is broken between the community, there is a high tendency that people will lose faith in such stable coin. But one key important thing for the ones that are backed with fiat is that when people want to lose trust, they always know that there is the regulations out there that will ensure that the issuers of such crypto stable coins must oblige to their promise of pegging it one-to-one, meaning if I ever come any day and I want to return back your issued stable coin, you should be able to give me back the fiat which you claim that is backed with it. But to summarize that point clearly, it's nothing but if that regulation is passed, definitely there will be a demand for algorithmic stable type of coins, simply because of the fact that people still do not want to just totally be under the controls of government. USDC, which is like the second most popular stable coin in today's market, is already having an issue or concern, especially from the fact that where they can blacklist any wallet. Though, of course, they are not blacklisting because they don't like you. They blacklist because either government is asking them to, or they blacklist because somebody has been involved in something that is shady. But who can say that government might not issue out that they should blacklist an individual simply because they are not in good terms with the person, not because the person must have done anything that is bad? For example, imagine Julian Assange, the founder of WikiLeaks, who's still under pressure, and under house arrest since how many years now? People already from the public school of thought would want to say that Julian Assange has not really done anything wrong, but from the eye of the government, especially the US government, he has done a treasonable offense simply because he had leaked a secret which they believe he shouldn't, even though the secret is something that is really damaging from the part of morality or from the part of what we believe should have been a global standard for a country like America. But that's a case of American and Julian Assange. But imagine if Julian Assange has stored all his assets in crypto, like stable back coin, like USDC. It means the government of America can just ask them to just freeze that particular wallet, and that's the end of all his assets. Nobody wants to run a decentralized world in that manner where government could just wake up one day and then close everything down for them. Hence, my reasons for saying algorithmic stable coins will be impacted on the positive side, not necessarily on the negative side.
Amazing. In reference to the question, I talked about, the U.S. House of Representatives trying to, consider a bill concerning the stable coins, and also the UK. Why do you think the development process in Nigeria has been very slow?
Okay, it's quite unfortunate that instead of regulators, especially the Central Bank of Nigeria, to be building bridge, they decide to burn the bridge that would have, made it possible for everybody, including them and the country, to really maximize the opportunities and potentials in this space. They also, for whatever kind of reason that they have given out there, believe for some reason that the reason why they've not been able to do their job is simply because people are utilizing novel technologies like blockchain or crypto to, do things that is below or that is not within the radar or of their duty. Yes, they have a responsibility, especially in terms of monetary policies and fiscal policies. That's one of the key primary responsibilities of regulators like central bank. But if they decide not to cooperate with the people who are either players or participants in this industry by simply putting out a blanket ban in it, I do not expect them to make progress in a country like ours when other nations like America are now pushing it out in the House of Parliament for stable coins to be backed. Of course, there are still some stable coins that are backed with Nigerian fiat. As a matter of fact, there are people who use something like NGN and NGNT, as the case may be. These are stable coins that are backed by the Naira. But of course, it's simply because the Central Bank of Nigeria or the regulators within Nigeria have not really extended that olive branch, if I would use the word. But of course, even though there's no fight of vendetta here, I expect them to must have extended that olive branch as a sign of peace between the players who they know that if they decide to not to cooperate, it is the government who might be at the losing end. Even though I know the government have the will and the power to do a lot of things, that doesn't mean they can, in totality, block the entire industry from taking advantage of the opportunities or the potentials within it. And hence, Nigeria have not really made progress because of the fact that regulators have not been forthcoming in the approach or the manner they chose for trying to regulate the space. They only just came out with a total blanket outright ban, and the closest we've seen in recent time, is simply coming from that of SEC and NFIU, which is the Nigerian Financial Intelligence Unit. But again, I keep saying that the Nigerian Financial Intelligence Unit does not have the mandates to really put out regulations. They have some level of mandates to cooperate and ensure that guidance from the Financial Action Task Force from a global perspective are adhered to in terms of policy. They only help to put people in check in terms of following certain policies, but they cannot help to make the laws that will govern them. And hence, people like SECs and the central bank are the key important people here who we expect by now should have been more proactive in their approach. But the key or the principal one of them, which is the central bank, have totally come with a total blanket ban as per the way and methodology they follow. That's why we've not made progress, nothing more.
Amazing, amazing. To everyone just joining in, we are still talking about the future of crypto exchanges in this world of possible recession and the crypto slump in the market. It is very vital for us to get into the grassroots level and find out what exactly is causing this problem. We are still here with Mr. Lucky, who is joining us virtually. Let's go on a quick break. When we come back, we'll discuss further. Today, let's check out the Moonbird NFT. Moonbirds is a collection of 10,000 utility-enabled PFPs that feature a richly diverse and unique pool of rarity power traits that can be categorized as an avatar project and the Proof Collective sub-collection. What's more, each Moonbird unlocks private club membership and additional benefits the longer you hold them. This collection of 10,000 PFPs, profile pics, has racked up to roughly 200.
Hello, my name is Chiki and I'm the boy of the bullet.
Keep watching Crypto TV Plus.
Don't touch that. Peace.
Welcome back. If you're just tuning in, thank you for being here. I have Lucky Uwakwe in the studio, joining us virtually, and our focus today is centered around the state of the crypto market right now and the future of crypto exchanges. Now, a lot of crypto analysts have expressed mixed emotions towards Tesla's 75% pullout from the Bitcoin market, which has negatively reflected on the market. Do you think this move is part of what has caused the crypto crash?
I think it's just unfortunate that a decentralized space like ours would want to look up to one entity or one body as that's guy who called the flag. It's quite an unfortunate one. But anyway, it's clear that people emotions cannot be separated away from their actions in terms of crypto trade as it stands today. People will always want to react based on certain sentiments of influencers. And of course, Tesla and the founder, Elon Musk, being the richest man in the whole world as of today, control a very huge number of influence when it comes to certain decisions, especially within the tech space and also in the crypto space. But Tesla selling 75% of their stake is nothing but a testament to the fact that people have the will and the rights to do what they want to do within the crypto space. And of course, people also have the decisions to make as regards to them following whatever decisions they also want to make. But I think obviously a lot of persons decide to panic for the fact that if Tesla is willing to let go 75% of their stake, which at the time when it was evaluated is somewhere around $1 billion, about $1 billion was sold off from the market. It clearly shows that people panicked with that procedure. But the thing I keep saying to people is that why is it that people are deciding to sell off after Tesla have decided to carry out a particular action? Already, by the time they made the announcement, they clearly have sold. And I remember tweeting that on my handle, saying, why is it that people are selling right now after Tesla had decided to sell their coin? So the minute the whole world got to know that Tesla had already sold theirs, Tesla have already taken the action. So for people to even panic sell after that time is just a bit laughable from my own perspective. All right. But however, it's really caused an impact, and it's a good thing if you look at it on the other side. The reason I say it's a good thing is I'm very concerned around entities or bodies holding too many sticks within the space. For example, Elon Musk as a person is somebody who really controls great influence when it comes to helping people take certain decisions, make certain steps. For somebody to hold that level of influence and also want to hold a huge chunk of the crypto or Bitcoin or whatever crypto asset is really concerning for me. That's why I'm also concerned, for example, the likes of Binance being the biggest exchange in the world and also holding, again, one of the huge chunk of Bitcoin volume. That's like put two kind of strong thing within them, meaning at any time they are impacted, people most likely would panic sell, just like the way they've done today. I rather prefer a situation whereby either Binance can choose to be either the highest holders of Bitcoin, or they become the biggest exchange in the world, one of them, but where they hold two important key positions in the space. It means anything that happened to them as of today, not only will people panic from the side of them being the biggest exchange, they also panic for the fact that they are also holding the biggest volume in terms of Bitcoin currently today. I think I remember during the dump, there was news that says Binance had purchased more Bitcoin, if not more than Michael Saylor, if I'm not mistaken, but I'm not too sure right now. But that clearly for me, it's a bit concerning. The reason I said it's concerning is because drawing the same narrative with that of Elon Musk. Imagine where Elon Musk being one of the biggest influencer, if not the most biggest influencer in the crypto space as of today, holding a huge chunk of Bitcoin of that amount. For any time they decide to say they want to sell or they don't want to sell, everybody panic. But if somebody is not as influential as Elon Musk and decide to sell $1 billion in Bitcoin, most likely nobody would even care much. But because it's Elon Musk, who's an influencer or a huge influencer in the space, hence the reasons for why you see a lot of people decide to sell off alongside the news, which is not really too healthy. Rather, I prefer a more decentralized space where somebody just hold one part of the influence, and that's enough. But where one person is holding too many influence within the space, either they are the most biggest exchange, or they are the most influential person, or they are the person with the highest quantity of Bitcoin holding, or they are the person with the highest developer community within the Bitcoin space, that becomes a bit worrisome, especially when if one thing happened to them, it takes a ripple effect, almost like long run. In fact, UST Terra is also another good example. Imagine where the Luna Foundation guard was holding that huge chunk of Bitcoin as at that time, simply because UST was impacted through people taking advantage, or the exploits that was discovered in the entire mechanism that they've put in place. We clearly see what happened, that they had to also sell off that chunk. So imagine if Michael Saylor would have been the most influential person. If anything happened to him today, people believe that the next thing he will want to do is to sell off his Bitcoin chunk to be able to rescue himself from whatever problem. And that's, for me, it's not really healthy. That's is my take or point as regards to that.
True. I think I'm also riding on that school of thought, because it links us to the next question of having Michael Stolari fraud case, puts a lot of security issues, and maximum safety of transaction is now a big concern for crypto investors and traders. So how can crypto exchanges build strong walls of security to address these concerns?
Okay, as of today, I must be honest with you, the crypto security mechanisms that have been put in place is quite good, especially when I compare them to the era of mid-Goals 2013. Recently, I remember, if I'm not mistaken, Shizet, which is the founder and the CEO of Binance, tweeting something around them discovering an exploit with another exchange, but no, he wasn't specific about the name of the exchange or what particular exploit. Clearly, it shows that the mechanisms in today's crypto exchange is such that there is some level of collaborations or interactions between exchanges in the event of, let's say, hack, or in the event of, let's say, there's some level of exploit, because of course what app impacts the exchanges or might also impact the entire or the broader crypto market to a large extent. So what will the players do? I think the players have really done well enough in today's world. What is probably left is for regulators on their own part to do their bit in a manner that doesn't necessarily stifle the growth, or that doesn't necessarily put this level of fear to drive away the opportunities or potentials for the people, where it's just, will I use the word, accredited investors, or what they call elective investors in the European world per se. Crypto exchanges today also still have a duty to increase their insurance policy, especially as with regard to loss or theft. And I remember Axie Infinity as one of the projects that had really made GameFi really super big within the space, had already made promise of refunding it to a large extent all virtually everybody that was affected by hack. So I believe when policies or of this kind, not just in terms of the platforms making these policies, but the regulators putting this as a requirement, sort of, or as something that people should, big platforms of that nature should put in place, that will automatically, it brings trust for even institutional investors or people who are still on the sideline trying to make a decision whether to come into the space or not.
And I think that the entire crypto slump has, made a lot of crypto investors to start contemplating whether to move risky assets to fiat currency, and making some decisions that might make or mar the market right now. So what can crypto exchanges do to keep their companies afloat at this?
Okay, so of course, one beautiful thing that the exchange world have been able to do, or within the blockchain space, including crypto exchange, have been able to do, is the fact that first, they were already quick to adopting to the new changes as regards to since post-COVID. Even before post-COVID, I think they were already working to a large extent in a way that suits the era of post-COVID nature. But to stay afloat at this point in time have been purely either to cut down on the necessary level of partnership. I think right now might not be the best time for everybody to keep shooting up huge partnership to a large extent. Exchanges can cut down on that. While it's painful for most people to lose their job, but from the numbers side of things, exchanges have not been able to find it easy. So hence they decide to cut down on numbers. I might not be an advocate for that as it stands today. However, I would rather say things that are not really too necessary in terms of impact into their products can be cut down. And one of those things I look into is in terms of some level of huge partnership. While day-to-day basic advert on social platforms or whatever platform can keep going or running afloat, things like that should be cut down. That's one. The second part they can also do is to ensure that costs that are borne through either as a result of utilizing certain financial or banking service, they can begin to form some level of synergy where two platforms can utilize some level of financial infrastructure service without needing to diversify, everybody having their own independent various platform, one for each, as the case may be. But a little bit of collaborations between platforms can also help, where it's help them to cut down costs. But say, of course, some level of freebies and free giveaways can be cut down, especially for platforms that do not really have the resources. We saw what the likes of Coinbase had done within this time. In the week of cutting down the numbers of their employees, they also had to stop their referral-based program, which they feel at this time might not be too necessary, especially from the side of bringing value for money as at today. While it might bring the customers, it might not necessarily guarantee that the customers might become a day-to-day active kind of trader. So they can cut down on these things. Of course, also work from home is something that we'll advocate for. If putting everybody in one central point or place can be some level of an increased expenses or expenditure on the part of the company. Of course, people can still work from home virtually. We saw that already at the peak of COVID within 2020 and early part of 2021. They can still continue on that mantra. Everybody don't have to return back to the office. So at the end of the day, so long as they're able to save cost and probably let the last thing be around retrenching or sacking people at the end of the day. For me, sacking people should be the last option among any company's list in terms of trying to stay afloat within this period. Unless we're having tried every other thing, still they cannot still stay afloat. Probably maybe the cost of trying to let staff go would be the lenders of last resort, if I would try to put it in that way. So that's for me is my own take around what exchanges can do just to stay afloat within this period.
We don't know how long it's going to last. Crypto exchanges just have to go back and re-strategize and find a way to make things work at this moment. Let's go on a quick break. When we come back, we'll be wrapping up today's episode. Stay with us. We'll be right back.
What's your worst experience with Nigerian banks?
I went to get a loan. They told me to wait. I waited. They gave me the loan. I went home. Then the loan was gone.
They took back their loan?
Yeah, they took it back. They said I wasn't eligible for it. After they collected their interest, because they decided to collect their interest first before they were to give me the loan.
And they didn't give back your interest?
Nah, they didn't.
Hello, my name is Chiki and I'm the boy of the bullet.
Keep watching Crypto TV Plus.
Don't touch that dial. Peace.
Welcome back. It has been an amazing time with you tuning in, and also with Mr. Lucky Wakwe, who joined us virtually today. Make sure to follow us on all our social media platforms at Crypto TV Plus. There's a popular saying that the bear market revolves around builders. So as a founder, what keeps builders going?
Of course, interesting. The best time for any founder or builder to build is in the bear market. The reason is because the pressure is less at this point in time. When I use the word pressure is less, there's always an excuse that you can always give. There's always something to say. Oh, can't you see that the market is in bearish mode? So the hype, the buzz is not really around you, and you are able to focus at this point in time. But for us as builders and founders within this time, we have to keep going from the perspective of understanding that for every work we build right now within bear market, at bull market, we're rewarded almost 2 or 3 times, even multiple times more than we would have if we were to have done same within a bull market. It clearly shows that anybody who's willing to invest or put in more time during a bearish market will most likely reap the reward, not just for himself, but also to the communities that have believed or that have choose to stick with them within any particular projects. The thing that have kept us going is for the fact that there's a reward that would always come out at the other end when the market turned bullish. And for this very reason, we have no choice but to keep building. We are more rested at this point in time. We're not under pressure from the community at this point in time. I will also know that by the time we turn bullish, whatever impact or work we've done within the bearish market will be rewarded in multiple fold. These are some of the things that have kept us going. And of course, most of us have been in the space for the single fact that we're entrepreneurs. Our duty is to always continue to innovate and build, like I just recently said in some discussion not too long ago with some group of persons.
Amazing. So far, we've talked about, most of the challenges that crypto exchanges have to face and are still facing at the moment. We've talked about security, regulation, control, and so much more. What do you think is the future of crypto exchanges in Africa?
Okay, perfect. For me, the future of crypto exchanges in Africa, clearly, as it stands today, have not been too bright. I use the word bright for the fact that because of the lack of clear regulations, people are not too sure what the certainties are. But however, if I want to be optimistic, from which I am, I'm always optimistic in terms of my own basis or in terms of my own analysis, I would say that the future of crypto in Africa is here. It's really, really, really here. At the end of the day, you will realize that 2 things: African policies or African implementation of certain rules and regulations might not be the toughest in terms when you compare it to other region, or might not be the hardest or strictest in terms of other region. For that single fact, it makes a lot of sense for it for the future of exchanges in Africa to be bright. The second part is that I think it's another key important thing we would look at in terms of the future of crypto in Africa, of crypto exchanges in Africa, is collaboration. It's important that two things, either whether it be local platforms or foreign platforms, there should be some level of collaborations. And it's important for foreign platforms to collaborate with the local one, whether it is in terms of supporting them, whether it's in terms of partnering with them, whether it's in terms of collaborating with them, whichever the case, there is more confidence for the platform with the upper hand. It's really key, because at the end of the day, people will begin to localize it. A time will come when people would also want to localize product and services. And the simple reason why they want to do that is for the fact of future global sanctions, future restrictions, future policies whereby you can wake up one day and you might be barred from certain platforms simply because the platform is not localized. Excuse me. Or simply because the jurisdiction where the foreign platform is coming from has either placed a certain restrictions on the local country, and at the end of the day, you're impacted. We saw that with Russia, we saw that with Ukraine. We saw where Ukrainian-based platforms had to bar and restrict Russians. These are ordinary Russians who probably might not have anything to do with the decision of their lawmakers or the people in power in Russia, but simply because they are just Russians by virtue of their citizenship, they got impacted. People will begin to make decisions in no future time around that, even as regards to exchanges in Africa. And hence, it's important that if any foreign exchange really want to win locally, they should rather it's better that they collaborate with the local ones than thinking that, okay, it might be good. Hence, if any local one decides to come up with something stronger in terms of service, there's a chance that the local one will win. And hence, my reasons for saying the future of exchanges in Africa is localized, not really foreign. For today, anyway, the foreign ones are winning, but I believe for the future, the local ones will most likely win. So any foreign one who really want to take part in that future, localize it from the perspective of collaborating or partnering, as the case may be.
Wow, thank you so much. We've had an amazing time talking to you, and I'm sure the viewers enjoyed today's episode on the Inside Blockchain. We hope to see you again, Mr. Lucky Wakwe.
Thank you so much. I appreciate Faith. It's nice being on the show, and you guys should keep up the good work. Always keep watching Crypto TV all the time.
Thank you so much. You can get more market updates and all the happenings captured within the world of blockchain and cryptocurrency on our website, cryptotvplus.com. Follow us on all our social media platforms at Crypto TV Plus to get daily info on all our programs. Thank you for staying with us. I am Faith Ekwari. I'll see you next week.